Will Christine Lagarde, the ECB president, cause the euro-dollar to fall further during her press conference tomorrow? Hello traders, Fabraz Exoda here, market analyst with City Index. Let's get into it. The euro-dollar is easing lower once again after a brief bounce from this key support area ahead of the ECB rate decision on Thursday. The European Central Bank is highly likely to keep interest rates unchanged, but as the ECB President Christine Lagarde's press conference, that will be monitored very closely because of the recent upsurge in the euro-dollar exchange rate, with the euro also showing its strength against some of the other major currencies. But the more recent drop in the euro-dollar exchange rate eases the pressure a little bit on them. Still, if the ECB seems to be a little bit more on the dovish side of things, we could well see some further downside follow through. And in particular is this area of support at around 117.50 to around 118, which is being tested at the time of this recording, that I'm watching closely, because this is where previously the euro-dollar had found resistance until it broke out at the end of January. But the subsequent reversal here suggests that the breakout may have been a false move. Obviously, we've seen the US dollar rally across the board, and this is more of a dollar story than euro weakness. At any rate, if the euro dollar were to go below 117.50 come the end of ECB's press conference tomorrow, I think at that point you'll have to start looking at much lower levels. For example, the 115 handle, which is some distance away from where we are at the moment, but it could well get there if the pressure continues on the euro dollar, as that will cause the liquidation of long positions and triggering stops and what have you, which could lead to an accelerated move. But the key question is, can this area of support hold? Well, if it holds, then first resistance is at 18.50, this line here. Above it, we have the September high that should have held a support really once we broke cleanly above it, but it didn't, right? So that is the next area of resistance. On the downside, then, the January low comes in at 115.78, where we have a bullish trend line. Below that, there's really not much in the way of obvious support levels until 115, and then thereafter you have the August 2025 low at 113.91. So those are some of the key levels to watch. But for the euro to stage such a sharp sell-off, obviously we'll have to see a significantly more dovish ECB than the markets are expecting, which I don't think might be the case. So therefore, any further weakness in the euro-dollar exchange rate is likely to come from a possible extension of the dollar recovery than necessarily euro weakness. Right, on to gold now then, and I've been banging on about this rising wedge pattern on the price of gold. This is the hourly chart, as you can see here. We have seen gold stage a impressive rally really from the lows. It was about 15% from the lowest point to the highest point today, before pulling back once resistance was tested here between 5,000 to 5,100, this shaded region, where previously gold had found strong support and resistance in the past before breaking below it at the end of January. That area is now being tested from underneath, and so far resistance is holding as you would expect, right? Where do we go from here is the key question now. Well, support at 4,900 is being tested at the time of this recording, which was the last kind of support area before the latest push higher into this range. If 4,900 breaks decisively, then from there gold could potentially drop to 4,800 and possibly be even lower in the days ahead, with 4,500 and 4,600 being the next levels of support or potential support from a higher time frame chart that I've drawn on this hourly chart. The 4,500 level was tested obviously following that big drop that we saw. This level has held, at least on a daily closing basis for the time being, but in the coming days, if pressure remains on gold, we could well see a continuation of the downward move that started at the end of January, potentially testing liquidity below the most recent significant low of 4,400 from here. So I think the risks are still tilted to the downside for gold, given the big sell-off we've seen and the fact that the US dollar is making a comeback. So unless something changes fundamentally, the path of least resistance, for now anyway, remains to the downside on gold prices. For more market updates and insights, head over to City Index, and I'll see you in the next one. Take care.